All right, folks, today is Friday, February 11th, 2022. And it's time to make another buy-in into the $1 million portfolio, as well as do my annual rebalancing. So I've set in my investment policy statement that I'm going to rebalance in the second week of February. And what I'm going to do to rebalance is to basically buy additional shares of the NASDAQ 100 QQQ ETF, as that's the one that I'm currently very low on. And I'm going to sell some of the gold shares to kind of make it more even. This won't be a complete rebalancing, as I plan to add more funds and bring it into balance over time as well. So those are the two moves. So rather than just rebalance everything, I'm going to use the new additional funds that I'll be adding every month to the rebalancing, as well as sell some of the gold shares. So first thing we want to talk about is that this $1 million portfolio is no longer $1 million. It's down to $996,000 roughly. That's basically all due to the down market in January, as well as a couple of days here in February this week where we have some really low activity because of the inflation data that came in. So it's not $1 million anymore. But by the same token, it's not gone down as much as, say, the NASDAQ has over the year-to-date period. So I think that's a good thing for this risk parity style portfolio to show that it's working. So let's go ahead and make our buys, because we have about 6 minutes left here before the market closes for the week. So first thing I'm going to do is go to the trade screen and sell 118 shares of the gold holding. And that's going to generate about $20,500. So let's go ahead and place this order. All right. It's a market order. The spread is really small on this particular ETF. I'm not at all concerned about trading it at market price. And it's not that volatile today. So, it's not going to be very crazy. So that is actually executed. So we're good to go. The next thing I'm going to do is I am going to buy more of the NASDAQ 100. So what I usually do with this $1 million portfolio is that I put in $30,000 a month. And I would usually just buy, the 4 holdings that I have. But because we're kind of out of whack in the portfolio, I'm only going to buy the QQQ. The reason that this is actually about $50,500 is that it's made up of the $30,000 that I'm going to add, as well as the selling of the 118 shares of the gold ETF. So let's go ahead and review this order. And we'll go ahead and click place. And this is a market order in a very highly liquid ETF, so it should also have executed by now. What we can do is we can go back here, and if I refresh, I will no longer have 500 shares of the gold ETF, but I should have some additional shares here for the NASDAQ 100 ETF. So let's take a look. And yes, the gold has gone down by 118 shares, and we've increased our holding for the NASDAQ 100. That's basically it for the $1 million portfolio this month. I'm going to continue to monitor it and see what happens. But overall, in this kind of bear market environment, not even bear market, recession or down correction, whatever you want to call it, it's doing remarkably well, right? It's not gone down nearly as much. So you can see that the day's change for the portfolio is, it's almost flat when you consider that the NASDAQ is down 2.5%. Now, the reason I compare this particular portfolio to the NASDAQ is that that's what I'm using as kind of like the main index for the stocks. Sometimes I'll compare it to the S&P as well, but that's what the whole risk parity concept is supposed to do for you, is that when one thing goes down, so this one's pretty big for the day, all of your other holdings, if they're uncorrelated, should go up and kind of provide some balance there. That hasn't always been the case with the long-term treasury this year as well as the gold ETF, frankly, because gold hasn't behaved the way that you would expect it to in an inflationary environment. But, in the last couple of days, it seems to have been doing that. So it's providing that counterbalance. And that's why I wanted to kind of sell some of these and use that proceed to rebalance into the NASDAQ 100. I talked about this when I did my monthly review for my portfolio as a whole, not just the $1 million portfolio. But, a friend of mine had asked me last weekend, should I switch over from growth stocks to value stocks, because that seems to be what you should do in this type of environment. And I basically said that it's better to just stick with a plan, because while it's true that you have these swings between growth and value, and over the long term, small cap value in particular has been shown to do really well, it's more important to stick with a plan and stick with it through thick and thin over the long term, especially if you have a long time horizon, than to try to guess what the next move's going to be. And that's one of the reasons that I'm sticking with my long-term treasuries as well, because everybody's saying that rates are going up, and due to the yield curve convexity, the long-term treasuries are going to be wildly affected. Their prices are going to go down a lot more. Yeah, they probably will, but I think that it's been priced in, and over the long term, I'm better off just keeping to my plan. So that's what I'm doing. I think that what I'm going to do is on the next discussion about the monthly portfolio, I'm going to go a little bit more into, what else you can do, because I do have a rather large cash balance. And I did recently deploy some of that cash, not all of it, but I'll talk a little bit more about it. The only other update that I'm going to give is that usually this time I would also show you my M1 Finance portfolio. That's entirely this allocation and fully invested with a monthly contribution of funds that is always invested. Just as a comparison, because this account right here still has a lot of cash in it. So it's not really a true view on how the risk parity allocation would perform. But I can't do that right now because I no longer have that invested in M1 Finance. I'm going to make a completely separate video on why I did that, but I had decided to just completely transfer all of that funds into one of my other brokerage for a variety of reasons. So I really can't really talk about it in terms of how it would have done. I mean, I can show in M1 Finance what that allocation at a static value would have done, but it doesn't account for the additions, which was the big add. But like I said, I don't want to make this one too long, and I actually plan to talk a little bit about it. So kind of like an M1 Finance review, as well as my personal decision on why I move, whatever I had in there, 30 grand, something like that. It wasn't all that much, but I did get rid of it. So I still have the account, but there's just nothing in it. So anyways, that is it for the $1 million update for February 2022. I hope you all have a great weekend. We have a little bit of a warm weather event here in February in San Diego. So I'm going to go enjoy my beer here and the 87-degree weather that we have, and maybe just go lay in the pool. So thanks, and I'll check you guys later. Bye.